What?
Hello, traders. Dale Pinkert here with Mike Venezia on the Dale and Mike show. How you doing today, buddy?
I'm okay, Coach. Thanks for asking. A lot, kind of a calmer week after last week, the Fed, and you had all those numbers come out, and then it's a little bit calmer. It's only CPI coming up. What is that? What, tomorrow, I believe so.
Yeah.
A little
that
bit
could
calmer.
Be a market that could move the needle. You know, we've had a lot of good inflation reports the last, I don't know, 4 or 5 in a row. So we'll see if they could keep that streak going. I just wanted to show our viewers, our community, what I believe is the most important chart on the whole board. And you're looking at TLT here, Mike, and they've stabilized and they've been moving sideways in an ascending triangle, which has the potential to break out over 109.5. You'd have a pretty good rally. The other way it could go is we could break down. And a lot of people saying this is a wave 4, even if we get a pop, and you see the weekly momentum at the lows. And I don't think the market is set up. If there's one thing that would be a surprise, I don't think new highs in yields on the 30-year would be welcome. And the real interest.
No, it wouldn't.
What's interesting, Mike, and it does speak to the debt ceiling. When you look at, say, TLT, which are sovereigns, right? And then you go to something like LQD. Where do I get those?
I follow LQD more than TLT lately.
And HYG. Well, they're getting more of the love, which is, kind of unusual, because, as you say, in the bond world, up until last year, the best of breed in bonds were sovereigns.
That's correct.
They were governments. So, that speaks to people. Here we go. So, LQD has a much better chart pattern. Look how far away from the low it is. And even the junk is getting more love. Junk actually looks good, so people are saying there's more risk from our government defaulting than there is from corporations or high yielders that are not supposed to be the highest quality bonds. So that's something, isn't it?
Well, considering there were probably a lot of stocks more on sale than even you have to take it is something. You know what? But it's just like the whole market. The buyers have been buying higher and the sellers have been selling lower, whatever it may be. There's with the VIX generally, and so actually it's a little bit of an elevated range still. Everything's been basically a range, and based upon that triangle, the previous one you showed me on the segue with the TLT, that's what it is.
Yeah. So we'll see if CPI, I'm not sure what's going to move it out of the range. And the other thing is, I keep thinking that there would be a little bit more risk on if the dollar would just break down one more time out of this range here. Back over 102, I think you could declare a bottom in the dollar, but I'd like to see the classic panic under a big round number like 100. And then look for reversals. So those are just a few of the things that I'm looking at. And my question for you today is, Apple's still everyone's number one stock. I saw it again on CNBC. I forgot Wikipedia Traders. That's their number one holding. Most of their membership is just doing nothing, and they all majority expect a 10% correction. But when you look
they're obviously not following the price action.
Yeah, and this is the last thing I'm going to say about Apple, which, I was on the wrong side of earnings, but I just want to let people know.
It was your post this morning in TradeGate Hub. I saw it.
Okay.
Please say it. Say it again. It was correct.
Anyone who bought the earnings report is underwater. I'm not saying that we've done anything wrong yet, but if we started closing back under 171, that would be your first sign. And for sure, if we get back inside this formation at 69.70, you'd have a false breakout. So anyway, I put some more positions on the earnings day because I was pissed.
Mhm.
No, but it's
That's
still
what I said.
the but the technical reason they didn't blow out the divergence. It's still under 70 with a big gap higher opening like that.
Listen,
So
you know
giving
what?
it a chance.
It's the Jim Cramer saying, I'm not going to lie to you. You own it or you short it. You don't trade it.
Yeah.
Uh, you know what I mean? Certainly it's more of, I'm not in it.
Yeah.
I had it long. I bought some lotto calls, but
Yeah.
I
I saw you
out.
bought you were long before the
I
earnings.
took some, listen, I took some lotto calls. There was a binary move I bought it I bought in the money. What did I buy? I bought 160. I think I bought 160s in the money.
Yeah.
Uh, with that being said, is now it's a gauge more of now it's more of a gauge for the market for me. It's more macro than me, Apple. I don't
Yeah.
want to say I missed it. If I'm really interested in building a position long, I'm not. I should be in it. I'm not going to. I should have been in it on a more bigger scale because it's been in that channel. But I've had maybe a little bit more of a market opinion than I should going upon price action. I'm an old guy, so that's maybe a little bit of an occupational hazard. But a couple of things that I wanted to say on a
Yeah. I
macro
wanted
level.
to hand over the charts to you because you showed the S&P chart early in the week, I think probably yesterday, with the 4,200 breakout. And I think the whole world is looking at that chart. Do you remember the chart you showed on? It was in the room
Yeah, it was in the room. It's in
on
the
the
room.
S&P.
Basically, the spies right here.
Yeah, yeah, it looks like it should be a layup, right? Breakout over 4,200, doesn't it?
What's happening, Coach, is that last week with the Fed and with an earnings rinse and the banking issues that actually got a little bit better as they really rallied the past couple of days. Now they're taking a rest. So that was a good uh chance for the market to rinse out some sentiment. Now, much like you said on the TLT, it feels like because there is a there is a still, it almost seems like more than ever as the market gets stocks start acting better, even statistically. I'll go to TradeGate Hub in a second. It feels like that something's going to give. One side has got to give, the bears or the bulls, and have that capitulatory either big move up and have blow everybody out and come back and let it rest, and then everybody can resume a bull market, which statistically I think yesterday we're out of the bear market. But that's
Okay.
a stat.
Yeah.
Or the bad news is, but you know what? Who's not to say that the P8, the Pacific West of last week, Thursday and Friday, when Pacific West was $3. Who's not to say that this was the final shoe to drop? You know what I mean? Maybe this was the final shoe to drop. Is there going to be a third?
Yes.
Okay.
Okay, I think we could rally from here, but that's exactly what's going on. You have a second drive to a bottom with a higher RSI reading. It could rally maybe to, the white moving average, wherever it is. But then break
It's
one
a
more
banking
time.
index. I apologize. Banking
Yeah,
index.
and this too, yeah, it needs to bounce, but
Okay.
you need to close over 40 to declare it's okay.
Oh,
That's my
well
view.
above. Well, and it's got to be 40, not like a break above it, and it's got to be a solid break.
Yeah, it's got to close back about
Yeah, it's
41
got
or
to back
so
and
because
fill,
that
get
was,
somebody out. No, correct. But you know what?
yeah.
With CPI, out. I still think something has got to give. It's now it's really stock picking, and I'm going to back to TradeGate Hub in a second.
I don't think this banking crisis is over, Mike.
You don't?
No, I read that,
Well, you're not
because
alone.
you have a better position book than half the banks in the United States, which have a 50% drawdown on capital from their bets. Okay.
Yes.
And then there's people like JP Morgan who have the biggest hypothecated short position in gold. That if gold starts blowing out through, 2,300, that could take JP Morgan down. So it almost seems like the banks have really turned into hedge funds and some of them, and they're taking a lot of leverage. And you know, I have to think that Powell knew all of this was going to happen and this was going to break, and yet he's still tightening.
Well,
Maybe
it
that was
happened that
his last one.
the Pacific, I mean, PACW had that day, as you see. Let me go back to the chart here. That night after Powell spoke, I don't know. Maybe I can question that a little bit, Coach.
Yeah,
But
it broke.
this was that Wednesday when he spoke. He spoke
Yeah.
that night, and that it broke that night.
Yeah.
So maybe he said, "I'm going to throw the baby out with the bathwater." I'm not going to deny that one, but you know,
He doesn't think it's a problem.
well,
And
that's
you know why I don't think he thinks it's a problem? Because it's intentional.
okay.
Sheila Bear said before they embarked on this tightening campaign that they should be very careful about the speed of taking rates up, because of all the leverage in the system, something would break. So something broke, and he's still tightening. And his buddies bought all these assets for 10 cents on the dollar. And the CBDC is a central bank digital currency. Maybe it's part of the plan to only have 3-4 banks and the Fed. The Fed's going to be the bank when we have a digital currency.
Well, they
It's
certainly
not
did that
coming.
with the.
It's not coming from the Treasury. Look at your cash. Do you ever carry cash anymore?
You know where I put my cash, but we'll leave it
All
there.
right. Well, someone told me that in New York City, to get a ticket to a game, Mike, or to a concert, they won't take cash. You have to put cash in a machine, and they give you a debit card to go pay for the ticket. Is that true?
I'm not. I don't know. I haven't gone to a game in a while.
All right. Anyway, that's where we're going, and it bothers me that this CBDC isn't coming from the Treasury. I mean, our all our bills and stuff were printed by the Treasury Department. Now we're going to have a central bank digital currency. It's like a takeover.
Well, it happened with the investment banks with Lehman, Goldman, Bear Stearns. That eventually happened. Lehman was the catalyst to that. Maybe Silicon Valley, maybe the SIVB was the catalyst to that. So
anyway, I'm just in a little bit of a rant, because I don't care if we melt up to 6,000 like Dave is going to say when he's with us Thursday.
That's incredible.
Or we break now. He's definitely sowed the seeds, and things are already happening, and the banks are underwater. Their books are underwater. They're not going to be able to lend.
And Coach is talking about,
we have a problem.
Coach is
Houston,
talking about,
we've got a problem.
Yeah, we do. About multi member TGH guest David Hunter, who literally made one of the most bearish calls in the history of mankind. On the opposite, as you can see in TGH here,
bullish. He made one of the bullish calls. 6,000 S&P.
Bullish. Did I say bearish?
Yeah.
I said bullish. I saw, and I said on the opposite, as I point to TradeGate, Javier just posted this morning that last year's biggest bull, Marko Kolanovic, actually this year's biggest bear, still down, doubled down this morning, saying that Monday the worst is yet to come for the market. So this, with this book, I think that's an egregious statement. I'm going to tell you why. It also falls back on the oldest Wall Street cliche. You only have to make it once. So he made a great call last year, but how many times are you going to double down? You know what I mean? He's been doubling down for a while here. With that being said, is SPY, lowest daily volume yesterday of the year. Keep that in mind.
All the vol is drying up. It's dried up in currencies. You have some pretty good vol in energy,
and the
metals are still whipping around. But the S&Ps, if you've just put up yesterday's S&P chart, is like watching paint dry.
You know what? You should be following who I follow, and I don't tweet or do that a lot. But he's right, my man here. Where is he? April 29th. Good.
Tom Longo got over 2,000 views on that interview.
Was that so?
Last week? Yeah.
Bravo. I'm not surprised. I'm not minimizing your effort, what you did, Coach, but it's
bringing the eyeballs, bro.
Yeah, I'm trying. Believe me, I'm trying to keep everybody afloat here. Bottom line is the liquidity is going to dry up, and you have to be careful about your larger positions at this point. So,
Yeah.
I'm just going to go with sweepers. What's
Okay.
going now?
Yeah, I heard what well I read what you wrote, not a lot of conviction in the sweeps today, huh?
No, there isn't in any sweeps. Listen, it's even the volume of sweeps of speculative sweeps have abated.
Okay.
Even the dailies, the ones they want to take a position in are
It's like being in the eye of a hurricane.
You know what? I'm not gonna. It feels like it now, but you know
Yeah.
what? I would boil it down to summer trading, but everything moves at one time.
It's
But you
not
know
even
what?
summer yet.
No, it's not. It's raining now. It's going to be raining out here
But
too.
June 21st is summer when you expect it to slow down. It's slowing down way before it normally does. Maybe a lot of people are broke from crypto and owning the wrong stuff last year, and there aren't as many, participants. Or maybe people are just, just going to money market accounts and saying, you know what, I'm going to take the 4 or 5. I'm not going to play. It's their markets are choppy as hell, and I'm not Mike Venezia.
Well, I
Okay, the
in the
most
TradView
people aren't.
portfolio, I have. I'm in third. It was probably 65-70% cash.
Okay,
VIX being a part, and by the way, VIX, I don't even want to include it. VIX probably being 5% of that, 30% that I'm long, give or take. So I don't, that's okay. But it's boiling down to still stock picking again, Coach. Just let me make one
yeah,
more point here, and that was what Stifel said this morning. I usually don't comment on what people say because that everybody's intelligent enough to digest information. What they say, prefer cyclicals over defense. I think it was today.
oh yeah,
First
I
time,
read
right,
that.
Bank of America, first sign of a stock picker's market since 2008. I said you're a little late. It's been stock picking for some time, maybe 4 to 6 months. By no means am I comparing myself to B of A, but I am a little bit more of an intensive trader. With that being said, is wait till something is going to give. Either there's the eye of the storm within that. There are plenty of stocks making tremendous moves. Sava, let's go to a couple card. These moves are working. Sava had moves yesterday. It was in
Wow,
play.
yeah.
Stocks are acting well with pricing. Look at Carvana. Carvana's up. Let's go. Carvana from 6 to 11 doubled this week. Okay.
Uber, I saw a lot of people
Another one.
were
They're
on
all
Uber.
chasing. They're chasing
Yeah,
Uber. They're chasing Shopify. They're
yeah,
chasing DraftKings. They're chasing a handful of stocks. And by the way, whether or not that anybody at management is listening, I want to make another point here. The reason why some of these chat GPT algos are making money is they're programmed to buy, for example, a stock above a 90% RSI in an uptrend, and that's arguably you can put that in with the 2% pullback buy. And that's why these stocks keep doing this, Coach. And that's why the majority of them keep doing the same thing. And it edifies my statement. You don't see a lot of reversals. PayPal's down $9 today. Stocks aren't really capitulating because they're buying higher and they're selling lower. You know what I mean? It's the opposite theory, if you will. So
okay.
we're gonna wait.
George Costanza trading methodology.
Well, I certainly want to I didn't get this far in my career to certainly put all my thought into something and say, let me do the opposite now. That'd be ridiculous. I didn't get here to get to that point.
You got to shut your platform down then. You know what else you have to shut your platform down? If you're sitting here and you're scanning and you're looking and you're looking, and I notice a few guys in the room doing it right now. What do you think of this? What do you think? If you're searching for a trade, there's no trade. The trade will be there and you'll see it'll be so compelling you won't be able to stop yourself.
But Coach,
But if
that's
you're
why
saying, I got to find a trade today, you're in trouble.
no, that's why they're here. Listen, it's like I'll leave it in that Goodwill Hunting is when they go to you ever see the movie, Coach?
Yeah, oh yeah, great movie.
Is my one day I want to sign in and not see Paul again. I never
Yeah.
want to hear from. It's like when he knocks on the door. Remember, he says
Yeah.
the greatest moment of my life is I come in the construction job and you're not there and you disappear and actually make. I hope I never hear from Paul again because he actually knows what to do and takes it from. You know what I mean?
Yeah.
So everybody, more eyes the better. We bring you the ideas of all financial instruments. If you're not please go into TradeView Markets. For those that are not familiar with the site and just go with the TradeGate Hub, you're cheating yourself. Because if you really like TradeGate Hub and it's one tab on our site, we have a whole universe here. Get to know it. It's a family office. Coach is in San Diego. I'm in New York. Lewis is in Peru. The cable guy is somewhere in England. I know Gerard's in Austria, for crying out loud. So we got a lot of eyes.
We're global.
We are global.
We're
That's
global,
why we're here.
man.
So
Yeah.
with that being said, I'll post a list of earnings tonight. Don't let your trades become positions. If you do, know what you have. Thanks again, Coach. It's always a pleasure.
All right, buddy. Love working with you. And remember, everyone, don't just count your pips, count your blessings.
That's true.
And we